I'm about to buy my first house. I've never spoken to anyone about mortgages before. What's the first thing I should do?
We would recommend that you go and speak to a mortgage advisor. So whether that's someone in your own bank or you go and speak to someone a bit more independent. A good mortgage advisor should be able to help you set a budget. So budgeting is key when you're thinking about buying your first property. They'll have a look at your income and will have a look at your expenditure and decide how much you can afford to put aside for your monthly repayments on your mortgage.
Will they take any existing debts that I've got into account when they're looking at my budget?
Yes, so this is quite important. So when assessing on how much you can borrow, the banks will take into account anything that you have, such as credit cards, car finance, any loans, because these will affect how much your income can go towards your mortgage repayments.
Will they take into account student loan?
Yes, they will. So a lot of people forget about their student loan, which is something we see quite commonly. Because it comes off your payslip each month, it's easy to just think, oh no, I don't have one. However, it is still a loan and lenders will still take account of it.
You mentioned bank or building society and independent mortgage brokers. Just talk to me a bit about the difference between these two groups of people.
Yeah. So mortgage brokers are, most of the time they will be independent or they will be tied. If they are independent and whole of market, it means they have access to all the banks and building societies on the market for you. If they are tied, or if you went direct to a bank, they will only be able to offer you a limited number of products and deals. So ideally, if you can, go see a whole of market mortgage broker. You have a much better choice and you'll find a much better suited deal to you.
Right. And how much am I likely to be able to borrow as a percentage of the price of the house I'm buying?
So it's all relative to your income and how much deposit you can put down. You can borrow up to 95% of the property's value, so put down a 5% deposit. However, we would try and recommend put down as much as you possibly can. The bigger deposit you can put down, you tend to have better access to cheaper rates.
Right, okay. Are there still 100% mortgages available?
There are still 100% mortgages available. However, we wouldn't recommend that you go for one of those. As mentioned before, the more deposit you can put down, the better rates you're going to get.
But with a 100% loan, who's at risk, me or the lender?
It's more so the lender that's at risk. So when you have a 100% mortgage, you don't actually have any equity in your property. So if, for example, the property prices were to collapse like we've seen in the past, you have no equity in that property, and if you then fell behind on your mortgage repayments and the lender had to repossess your property, they need to make sure that they're going to get their money back. So if your property price has dropped below that first amount when you first bought it, this becomes a problem for the lender.
And does that still happen quite a lot? Are there still lots of people get into difficulties with mortgages and houses have to be repossessed?
There can be. There's lots of different reasons that people fall behind on their mortgage repayments. There's certainly lots of different ways that the lender wants to help you. So if you are in difficulty meeting your repayments, your first port of call is always to contact your lender and see if there's anything that can be done to help get you back on track.
Right. Just say that again, because I think that's a really important point.
Mm-hmm.
If anyone's having problems, because I talk about debt a lot to people,
okay.
And I kind of make this point about debt generally, that it's easier to speak to your lender if before you get into problem rather than when you're 6 months in arrears. But the same is true of mortgages.
Absolutely, yeah. It's very easy to just bury your head in the sand and think it's all going to wait, which just makes things so much worse. So as soon as you know, or if you believe you're going to come into difficulty with your mortgage repayments, always contact your lender in the first instance, because more often than not there is things that they can do and put in place to help you get back on track from where you need to be.
Which brings us neatly onto the idea of credit reports. Lenders use credit reports quite a lot now when it comes to assessing people for mortgage purposes. Just talk about that for a minute.
They do. So your credit report is actually really important when you're going to apply for a mortgage, especially if you're a first-time buyer. The lender uses your credit report to kind of see your history and how well you're good at keeping repayments. So maybe you've had credit cards or car finance in the past. The lender wants to see that you're making your repayments on time, that you're not missing any, and they'll use that to make their decision on whether or not they can then give you a mortgage.
Some people will get put off applying for a mortgage because they think they've got problems, or they think they know they've got problems with their credit history already. Are there things that you can do to repair, to make good a poor credit history?
Absolutely, yeah. So although it's not going to be an overnight fix with any credit history, it can take a few months for your score to rebuild and improve. However, there are plenty of things you can do. First and foremost, it's keeping up to date with all your repayments. That's probably the most important thing you can do, making sure that anything that is outstanding is repaid. And also there's little things that you might not have thought of, maybe being registered in the voters roll, that gives you some extra points in your credit score, keeping a good track of your address history as well. These are all important.
So should you if you know you've got a poor credit history, should you let that put you off applying for a mortgage?
No, so although it can be more difficult to get a mortgage if you have a poor credit score, that doesn't necessarily mean that you can't get one at all. So we would recommend that you do speak to probably an independent broker who has access to lenders that maybe specialise in this area. Although it might be a bit more expensive than the regular mainstream mortgages, that doesn't mean that you can't get one.
Good. You talked about budgeting in terms of how much people can afford to pay when they actually come to buy a house. What other costs should people be aware of from a budgeting point of view, apart from their monthly mortgage payment? What else are they going to have to pay when they buy a house?
When they buy a house, so your initial cost, you obviously have your deposit that you need to pay up front. You'll also need to have a solicitor or a conveyancer who will do the legal work for you. So their fee can be quite high, and it will depend on who you use for that. So definitely shop around and see who's offering the best value. Other costs to be aware of are stamp duty. So this will depend if you're a first time buyer or if you're just moving home on how much you pay. Monthly cost wise, so yes, you have your mortgage repayments, but you also need to think about your council tax, your utility bills, and other running costs such as factors fees, perhaps if you're buying a flat.
Okay, you talked about tax there. If I'm not a first time buyer and I'm selling a house because I'm going to buy another one, do I have to pay tax on the house that I'm selling?
No, so it will depend on the property use whether or not you're going to pay tax when you sell the property. If the property has been used as your main residence, then when you sell it, you'll have no tax to pay. If the property has been used for investment purposes, so maybe you've been renting it out and having tenants in the property, then yes, you will be subject to capital gains tax when you sell.
Okay. I've seen a house and I really like it, but I think other people like it as well. I haven't seen a mortgage broker yet. How long should the process take? And what sort of information should I get ready so that I'm as prepared as I can be when I go and see the mortgage broker?
So if the property has a lot of competition, you really want to be getting in as early as possible as you can to speak to a mortgage broker. The mortgage broker will be able to tell you if A, you can afford the property and if the lenders can give you the money that you need to buy the property, but they'll also give you what's called an agreement in principle or a mortgage promise. This is when we approach a lender or a bank or building society and say, this is Mr. Customer, they would like to borrow X amount to buy this property, they do a credit check and say, yes, in principle, we can do this. And that kind of gives you the green light to go ahead and offer on the property with a bit of confidence knowing that you can potentially get the mortgage.
Right, and how long should it take?
The agreement in principle process is actually relatively quickly. What you do need to do is you need to be prepared. So when you go and speak to your mortgage broker, it's a good idea to have pay slips, it's a good idea to have your bank statements and also your ID to hand.
And what you talked about pay slips and things. Are the bank or building society going to speak to my own bank and ask to see bank statements, or will they speak to my employer and ask for confirmation of employment? Should I warn them that they're likely to be getting communications from a mortgage lender?
They can do. So if, for example, you have just started a new job, or if you're in the process of changing jobs, or maybe you're expecting a pay rise within the next couple of months, the lender might actually write to your employer just for a reference to confirm the details further. So it would probably be a good idea, if you're in one of those situations, to make your employer aware and to expect that coming through.
And what about if I work for myself, if I'm self-employed? Does that make the whole process more difficult?
It can make it a wee bit more complicated, but please don't be put off because it's not any different from if you were to be employed. We still need verification of your income. So this is normally done through your tax returns. So perhaps if you have an accountant, it would be a good idea to speak to them and have all the documents prepared. Or if you don't have an accountant, you can go onto the HMRC website and download them yourself there.
Okay. And last question. I mean, do you still think is buying a house still the right thing to do?
Absolutely, yes. I definitely think so. We're in a kind of generation, I guess the millennial generation, if you like, generation rent is what we like to call it, where it is harder these days to save for a deposit. So we are seeing that first time buyer age is being pushed up. I think the average age is now 31 or 32 years old now. Deposits are getting smaller, people are taking mortgages over a longer time. So it is becoming a bit more difficult. However, I would always recommend that you buy property rather than renting.
Why?
Because it's an asset in your name. So with renting a property, you're paying money every single month and you're not going to have anything to show for it at the end. Although you have a roof over your head, which is fantastic, the property is never going to be yours. If you have a mortgage, you're repaying that over a certain amount of time, and when the mortgage finishes, you have a debt-free property to live in.
Okay. I said that was the last question, but one more. You're talking to a room full of people who have never bought property, and some of them are thinking about doing it. 3 things. What's the most important 3 things that they can do to be as prepared as they can be when they come to get that first house?
Setting a budget and having your documents organised, so having everything ready and to hand, and also having your deposit saved and ready to go.
Merlin, thanks very much.
Very welcome.